Hi everyone. Today let's talk about Johnson & Johnson earnings, and then we'll get into Procter & Gamble earnings. Then we'll go ahead and get into the charts for both and see if there's any potential trades. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Johnson & Johnson earnings came out and they did meet expectations, but they are moving a little bit lower in price. We'll take a look at it on the charts. Earnings were $2.29 versus the consensus of $2.28. Sales grew 7.3%, which is pretty strong growth for a very large company like this. And as a result of this, they say shares were down 0.8% in pre-market. Might be a little bit of an opportunity there. We'll see what that looks like. They mentioned that Johnson & Johnson is the first big pharma company to release earnings, and it was pretty good. Earlier in the month, we did get Humana as well as United Health, which also reported better than expected earnings. So it seems like the sector continues to be healthy. We have talked about healthcare as a whole continues to rally pretty aggressively. We'll take a look at that on the charts as well. And they say J&J had no major surprises, and they did deliver on all of the expectations, giving a really solid quarter. Moving over to Procter & Gamble, giving a little bit of an idea of what the consumer is doing, and they did miss on their expectations. And they did mention a big driver of this was Gillette going down by $1.3 billion, pretty large on the razor maker. And looking at earnings per share, $6.37 versus $6.43, which is not great. And even with that, the company is rising by about 1% pre-market. Earnings per share, however, were up 14 cents, so that's pretty good. And then revenue missing by just a little bit, so margins better than expected, even with revenue coming in a little bit light. And then they mention it again, like I said, Gillette being written down by $1.3 billion, and they mentioned they're going to record about $2.5 billion in charges related to the Gillette brand. So pretty interesting there. Apparently Gillette not doing well, but overall the company is doing well. Net sales rose 3% to $22.4 billion, so continuing to be a pretty strong consumer staple with strong earnings. Moving over to consumer staples here for just a moment, you can see we've been on a pretty strong run since the end of October. We are starting to roll off a little bit. We're below the trend, selling off, looking at 70.85 as my next support. Momentum and RSI don't look great. I would expect this to continue lower. Pre-market, it has not moved at all yet. So staples not looking super strong, coming into resistance at that 200 SMA. Let's see how that reflects against Johnson & Johnson and Procter & Gamble. Moving over to J&J, you can see it's in this rising wedge right now, which is typically a bearish signal. So it's almost at resistance. Makes sense that it's actually down a little bit pre-market. Really, it just looks like it hit resistance. So I don't know if it's reacting to the earnings or if it's just down. Let's look at it on the shorter time frame. Not really a major move. This company does not move a whole lot. These swings look fairly dramatic, but really this is from 158 down to about 153. So it's only about $6 of price action in that range over the course of several days on Johnson & Johnson. It's a very stable stock, not great for trading typically, more of a buy and hold type structure. So rising wedge looks slightly bearish. It's at resistance, not great. And given that a quick comparison here to healthcare, you can see healthcare, on the other hand, has been on a massive run, down from 123 all the way up here to about 141, wicked almost to my 141.70 level. Did pull back, held the trend, held the 21 EMA, retesting that level. If it breaks here, look for a higher high. If it breaks down from here, that's going to be quite the bearish indicator. Momentum bearish right now. RSI did peak up a little bit on that move. It's at a critical point, definitely. But overall, the healthcare sector looks a little bit stronger than J&J. You can see this previous peak is much lower than the current peak, which was not the case on the J&J charts. And then moving over here to Procter & Gamble, you can see it's been trading sideways for a very long time here. We got into this range going back to November of 21, and now we are in that same exact range here in January of 24. So been in the same trading range for a while, and you can see that same structure. Your high is at 157.76. Touched that here in August of 23 and then here in May of 23. And since then, we've been holding support at 143. Touched it in May, touched it again here in October. And then you have this kind of downtrend line marking lower highs each time. Very, very short term bullish trend. Bounced off that level here in the pre-market. You can see it on that earnings news. Big spike up, hit the resistance. If it breaks out here, that could be quite interesting. We've respected that downtrend line a few times. And like I said, if it breaks, then you're looking at 157.76. You might find some resistance here at 153.50, but that would be shorter term. I would really expect a retest of that 157 77, 76 level, especially coming off of strong earnings. Usually there's good volume behind strong earnings. So potentially a little bit of opportunity there with Procter & Gamble going into today's session. Moving over to trade ideas, you can see there is no volume here on J&J, and then looking at P&G, also basically no volume here on the options, so does not make it a good stock to trade for options. Let's look at it on the charts. Starting off with J&J, definitely a clear uptrend on the shorter time frames. It's right in the middle of that range. Your mid-level sitting around that 161 level, looking for a move potentially up to 166 as your upper trend line. You can see we hit that here. Momentum rolling over, not a ton of volume, but if it holds that midpoint, could be something to trade off of. We touched it here, rallied up, touching it again, rally up, potentially something to look for, a couple of points of potential upside on J&J. And then looking at P&G, you can see this is still a technical downtrend. You can see the dots here to the upside, indicating that your bias should be a little bit bearish, but really you're in the middle of a consolidation. So you're looking for resistance potentially up around that 151 level. Again, we said that that trend line is worth watching. I do think that is critical, the trend line that you're at. So if you break the trend line, that does give you some opportunity. Your upper price target would be 153.80, which is right in that area of that first resistance. If it's going to get to that upper level, it might take a little bit longer. So if you're trying to trade short term, PG giving you that 153.80 price level, did get a step up on momentum, did get a solid R vol here on 22 January. So definitely some opportunity on PG&E. The structure is a little bit weaker than J&J, but the strong earnings should give you a little bit of a catalyst. Let me know down in the comments section if you like either of these companies. Are you buying them? Are you trading them? Let me know your thoughts. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.